Hi folks, this is Sean Hyman from Chart of the Day, and I want to talk to you today about why calling tops and bottoms are just futile. And it's easy to see things when we see a trend unfold. Things look obvious, but the problem is when a trend is forming, you only have part of the chart. You don't have the remainder of the chart, like after you can look back and see that a trend has ended. For instance, right here we had a downtrend right here, and of course here we can see that it ended, so we know this was the end of the downtrend and we can look back and see that. But if you're in this trend as it's unfolding, you can't tell that it's at the end of it yet. And so what traders will do is when they see a sell-off, and a huge sell-off like this came from over a 160, and it starts settling down in here and going sideways, and pretend that you can't see past this part and that the trend is still unfolding, but we don't know which way it's going to go. It goes sideways, so it looks like, okay, the bottom's getting put in, and after all, it's dropped from over 160 to 146 and change now, so hey, that's a huge drop. It's got to come back, right? And then what happens? It blows through that. So traders let it go a little further, and so they messed up calling the bottom there. So it comes down to here in the downtrend, and hey, it falls here and it bounces up good. So that's got to be the bottom in the downtrend, right? Because we've gone even further now. We've gone from above 160 down to 140. So heck, we're down 2,000 pips. I mean, this thing has to come back now, right? I mean, it's way oversold, correct? Well, so it bounces up, and then it blows through that bottom as well. And then here's another one. And then finally, we get down to the one down here that ends up being the real bottom. So people were trying to pick bottoms all the way from from the time when it started falling at 160 all the way down to 125 basically on the euro dollar. And what they probably really should have done is just wait for a major trend line to break before even considering it. But even then, you'll usually have a time where it pops up and it calms down and then makes its next real run. So point being, you're usually going to go downtrend, sideways trend, which is a range, and then upward in an uptrend. So let's take a look on the upside. When uptrends are forming, you've got an uptrend here, and this is obvious to see now that we see how the trend unfolded, right? But let's pretend like we don't have all this data in front of us and this trend is starting to unfold, and it's going along the way. It's come from 125 down here on the lows. It runs up to one of its first sticking points, which is right here, and that's at 143. And after all, you think what's come from 125 to 143, that's pretty huge, right? So it's got to it's got to be one of these tops, right? So it goes down, it goes sideways. The market kind of peters out for a little while. So we go, okay, well that's a top, right? And then it goes into a little false breakout, comes back in that little sideways range, and then we get the real one. Well, and then people go to here and try to call a top again because the pair has risen significantly. It pulls back off of that high, and after all, I mean, we've gone from 125 now all the way up to 148. So that's a trend that's gone too far, right? It's got to pull. That's got to be the top, right? So it pulls back, blows through that again, and then here we are again, just above 150, and you're going to have a ton of top pickers here as well. And guess what? There's a huge chance that it would blow through here also. So the point being that the trend is likely to continue. It's likely to blow through what people think are bottoms and what people think are tops. And that's why trends are trends, because they last longer than people think that they're going to. And so I would encourage you not to be a bottom picker or a top picker. I would encourage you to go with the trend. That's why you get old Wall Street sayings like the trend is your friend until it ends, and stick with the trend, trade the trend, that sort of thing, because it really is true. That's your edge. Your edge is in going with the momentum, with the order flow, with the big money flow, and not against it. So it's as futile as swimming upstream. It's just not a smart thing to do. Why not just go with the river in the direction that it's already headed? So as we approach new levels for the first time and even again on Euro 150, of course you're going to get a lot of people saying, okay, 150 is the top. While there is a slight chance that it could be, this is one thing that experience has taught me. When everybody's calling for the top, that ain't the top. Tops are never obvious. Tops form when everybody thinks you're an idiot for shorting at that level, and they think that it should continue on. I'll give you, for instance, a quick story here. NASDAQ 5000 rolled around, and I'd done well in stocks, and later on used that money to make down payments on houses and all kinds of stuff that I'd had, and cashed out stock options, took my 401k to cash, all that kind of stuff. People, not only did retail clients think I was an idiot, but my fellow stockbrokers thought I was an idiot as well. Why? Because we had gone from NASDAQ 2,000, 3,000, 4,000, 5,000. So why shouldn't it go to 6,000? It's only logical. It hadn't gone down in a very long time. So why should now be the top? Well, I knew it had been frothy, and I'd already let the actual real top kick in. I'd actually let the real retracement come back and break the uptrend and pull back towards it before I sold out. So what I did was I actually let the trend break. However, there's such a euphoria at the time about the trend continuing, everybody dismissed it and just said that it was another pullback in the market and another good buying opportunity. So a lot of you that were stock traders during that time probably remember that very vividly, hopefully for good reasons, but I'm sure a lot of people for bad reasons as well, because they got caught in the downdraft and didn't see it. So, but what I did was I let the trend change first, and then I acted on cashing out my stock options, taking the 401k to cash. So that's what I encourage here. Stick with trends, no matter how radical they seem, no matter how unrealistic it seems that it's going up. Even if your own mind that it doesn't seem like the euro should be valued at 150 or 155 or 160, if it goes to it, if the trend's still up, stick with the trend. Don't fight the trend. Don't fight the tape, is what the old Wall Streeters would say, because markets get even unrealistic. They will go further than you or I, either one, think that they will go. I would have never guessed that 160 would hit. A good friend of mine had sold some real estate in Ireland, and it was in euros, and she said, when should I convert my money back to dollars? And we were at I think euro 140 at the time, way back here. And I said, I think that you probably ought to pull it out at about euro 150 or euro 155. And I'm not saying, I told her, I said, I'm not saying that's the top. All I'm saying is that I think a year or two from now, you're going to be glad that you converted back to dollars at that time. Well, what happened? It did go further than I thought. It did go to 160 and a little above, which I thought was just so extreme and so, just unfathomable. But that's what markets do. They go past what you think that you or I, either one, will think that will do. But what did it do? It came crashing down. Euro dollar came crashing down, went back to 125. And so, she was able to, to cash out at a very high value and convert it to dollars when it made the most sense to do so. So we didn't call a top. We weren't trying to call a top, but we knew that we were in a frothy area. And then later on, a trader would allow the actual trend to break and change. So that's the chart of the day. Thanks so much for attending. Bye-bye.